Markets regulator SEBI has notified a stricter regulatory framework for small and medium enterprises IPOs by introducing profitability requirement and capping a 20% limit on offer for sale. Reforms aim to provide SMEs with a sound track record and opportunity to raise funds from public while protecting investor interests. This move follows a rise in SME issues which has driven significant investor participation. With regard to profitability criteria, SEBI and SMEs planning to launch IPO are required to have a minimum operating profits, earning before interest, depreciation, and tax or EBITDA of 1 crore for at least 2 out of 3 previous financial years. Also, OFS component by selling shareholders in SME IPOs has been capped at 20% of total issue size. Additionally, selling shareholders will not be allowed to offload more than 50% of existing holdings, SEBI said in notification dated 4th March. Further, promoter shareholding over minimum promoter contribution would be subject to phased lock-in period. Half of these excess holding would be released after 1 year, while remaining 50% would be unlocked after 2 years. Allocation methodology for non-institutional investors in SME IPOs would be aligned with the approach followed in mainboard IPOs to ensure uniformity. Further, SEBI has increased minimum application size for SME IPO to 2 lots, making entries stricter to avoid unnecessary speculation in SME IPO. This would help protect interest of gullible investors who generally invest looking at escalating share price. The amount allocated for general corporate purpose in SME IPOs has been capped at 15% of total size or 10 crore, whichever is lower. SME issues will not be permitted to use IPO proceeds to repay loans taken from promoters, promoter groups, or related parties, whether directly or indirectly. Objects of issue should not consist of repayment of loan taken from promoter, promoter group, or any related party from issue proceeds directly or indirectly, SEBI said in the notification. The draft red herring prospectus for SME IPOs must be made available for public comments for 21 days. Issuers will be required to publish announcements in newspapers and include QR code for easy access to the DRHP. Joshi said DRHP pertaining to IPO and SME segment, which was still not cleared by stock exchange, would now be available for public comments on SME exchange website of the issuer and merchant banker to the issue.